guys. So we're gonna be going over invalidations today. How to start off with your first invalidation and kind of how to refine your invalidations while price is kind of printing intraday, right? Because your invalidations are gonna move after certain things happen, right? So your first invalidation is always gonna start on the daily chart, marking out the EQ of that previous day's range. So if you have a candle 2 close, you could be marking out EQ of that wick, right? You want to see candle 3's low supported in the upper half, right? This just mechanically defines a small wick, right? Because if price was to disrespect this EQ or trade past it, then we're just creating a large wick, which is one of the filters we use for trading expansion, right? We always want to be trading expansion, which requires that small wick. Now, once you mark out EQ, right, there's only 2 ways you mark it. It's when you get an expansion candle, the other way is just mark out the whole range, right? You want to see price, expand in the upper half, right? So once you have that range marked out, this is where we go to refinements here. So how do you refine it? Is only 1 hour or 4 hour chart, right? You're going to be looking within that range for a fair value gap on the 1 hour or 4 hour, an order block on the 1 hour or 4 hour, or just lows around the new day opening price, right? Because if we have lows below the new day opening price, we don't want to trade away from failure swings. So ideally, we manipulate these with create a protected swing, right? Because these would be examples of relevant swings because of the space between them. This is a failure swing to this swing. So if price manipulates this relevant swing, that would create a protected swing, right? This would be GXT ideal profile, right? So this is what it would look like if price starts to stand away, right? The daily would just open low into that. And this is where you get those continuation day, right? We're just continuing from the previous day's range and price away from that fair value gap, which is just an internal to external move, right? This is what we talk about in my stream on April 5th. We talked about how to create the high and low of the day from models, right? Internal to external. Here's just an order block or just order paying ranges, right? This is for continuation. This is the protraction phase. So the protraction phase meaning the open, which creating the wick, right? This is what we're talking about right here. So when price actually trades into this level to create the low of the day, as soon as it that level, this is when we can start to trade after we create a swing point, right? Because when we create that swing point, this is when we expect price to expand away from the swing point, right? Now it can be for continuation here as well. So it's really any key level, right? So this is key level invalidation, but it's also, to form a low of day, obviously we form it from a key level. So once you get that swing point, this is where we look to trade. And this is, my little brother being stupid. This is, once we have that swing point, this is where we look to trade and we want to see price expand away from the swing point, right? Obviously. But what happens if price doesn't actually, it creates a swing point but doesn't expand away. This is when we require that swing point low to be our new validation level, right? And this is gonna be in the session of a lot of times session highs and lows. So what I mean by that is, let's say Asia session trades into this invalidation point, or maybe just Asia session just prints a low or whatnot in that gap or something, and it doesn't reverse. Well, then we draw out that swing point low, right? We draw out that swing point low. So let's say this is Asia session. We would ideally want London session to manipulate that level to expand away, right? So as soon as we engage that level, this is where we look for what? A swing point again, right? It's the same thing, right? Because that low would be a key level, and the key level invalidation or validation is a swing point, right? And price must expand away from the swing point. This goes back to phases of price, right? Because when we manipulate or when we trade into a key level, we need to expand away, right? So what if price, when we hit that invalidation level, right, we don't actually expand away? Well, this completely invalidates the whole profile, because at this point, price is just creating lower lows in that key level, right? So you completely negate this key level, and it's probably likely going to expand into the next relevant swing, right? Because there would be like a swing low down here or whatnot, and this low that we're seeing right here is like the relevant swing, right? Because the space between this low and this low, this makes it a relevant swing. If you don't manipulate this level, we're going to continue through it generally, right? So this would be a total invalidation of that key level or even profile. So what happens when price hits the invalidation level or hits some sort of key level in the protraction phase, right? It forms that swing point. You can trade this, right? But when we start to expand away from that, this is when we're going to confirm the low of the day or the protraction phase of that candle, the wick, with a CSD, right? And it all depends on what time this happens. So this is what we're going to refer to for Asia or London reversal. We're looking at the hourly or 30-minute CSD. This is because when we come to New York session and Asia and London are low of day or high of day, there's been enough time in the day, right, for price to actually create this CSD. So that's why we refer to an hourly or 30-minute, right? What about like pre-market? So anywhere from like 6 a.m. to 8 a.m., we're going to refer to a 30-minute CSD or 15-minute CSD to confirm that reversal profile. And during these really volatile times, we can use like the 5-minute or the 15-minute, because if you wait for an hourly CSD or something, you're just going to miss the whole move generally. So since there's a lot of volatile movements, generally it's just a couple of expansion candles, the whole New York session, then you just want to require like a 5-minute or 15-minute CSD, which just confirms a swing point if you really think about it, right? If this was New York session and you get a candle to close, well, that's the 5-minute CSD within that, right? So once price has that CSD, this is now continuation. So when we think about protraction phase, when you're trading the low of the day, right, you're inside of the wick, which is always ideal. We're looking for 1 hour or 4 hour key levels if you're going to trade it, right, to form the low of day. Now, once price starts to expand away from the low of day, then we're looking for 1 hour or 30-minute key levels for continuation, right? So this is that initial CSD, and this is what the key levels that we look for continuation. It's just propulsion blocks on the hourly or 30-minute time frame, or fair value gaps that expand away from that initial CSD. So it's simply just continuation order blocks or fair value gaps, right? Pretty simple. And these need to support price for continuation, right? Because if these fail, then obviously that would be your invalidation for continuation, right? Because one thing we know about expansion is we wouldn't want to see price retrace super deep back in the range, right? So this fair value gap like needs to hold, right? And this is also becomes your invalidation for 4 hour candles, right? Because let's say this is your initial key level to form the low of the day. You can trade it, right? So here's us marking out the swing point. You can trade this, right? When price starts to expand away, this is when we look for that CSD, right? So if this is like a London session, here's the hourly at 30-minute CSD. This is where we look for price to continue off of, right? To create that expansion of the daily candle, right? So this is where we look for entries. We look for 1 hour or 30-minute swing points from this level. And this generally, these 1 hour or 30-minute key levels that should support expansion are actually your invalidation points for the 6 a.m. candle, right? So, or any candle, any 4 hour candle for continuation, right? Because all we're doing is trading 4 hour expansion candles away from the low of day or high of day, right? So when price expands away from the low of day or high of day, it's going to create these 30-minute or 1 hour key levels. And it's the same process, right? We're going to look for key levels within the previous 4 hour candle, right? It's the same thing we just went over here, right? But this would be like the 4 hour time frame within daily continuation, right? So you're literally going down from the daily chart, right? Once it forms a low of day, price starts to expand away within 4 hour candles. Now you're marking on the 4 hour candles for continuation, right? So this is what we're doing here, right? Here's the low that they put in within this 2M candle. You have that hourly reversal, right? Now this needs to hold for price to continue, right? But also to continue, right? We need a 6 a.m. expansion candle, right? So the low of the candle ideally is formed from these invalidation levels for continuation, right? So that's when you get the hourly at 30-minute swing point, and that's when you get GXT, right? And then once we form a swing point from a key level, what do we want to see? We want to see price expanding away from that key level, right? Which would then create a new potential invalidation point for continuation, right? So that's what we would see like in this example here, where now we're forming a propulsion block, right? So this needs to hold, right? Which is just a swing point. So once we get that candle close, now you're doing the same thing but fractally. So let's say there's the hourly at 30-minute swing point. You're marking out EQ of that candle's range, and you're going to look for a key level within the upper half, right? You're going to look for a 3-minute or 5-minute key level within this hourly or 30-minute CSD, right? So it's all fractal. So this is kind of what it's looked like all together when we mark out E key of the previous day's range. So that's our first invalidation. Now we're refining it to the 1 hour or 4 hour. So we have that, right? Let's say we hit this key level, but we form a swing point, right? No, you can trade this, and if price doesn't expand away from the swing point, then that's an invalidation, right? Because if we truly are going to reverse, then what do we do after we reverse or manipulate? We expand away. So that would be an invalidation, right? This is when you would require price to manipulate that low, right? Which just forms a relevant swing generally, right? Intraday. So you can imagine this being Asia or London session hitting a key level, but it isn't reverse. So what do you require? You require that to be the reversal point of the daily candle, right? Because this would form a small wick, right? If you don't manipulate this low, like I said, you're creating lower lows in a gap or just within this range that you want to see respected. And if you don't manipulate this low, then where are you going to go? This low. And now you're just creating too large of a wick. So a lot of times, this is how, your invalidations look. It's on the hourly chart within swing highs and lows. So remember, for key levels to form the high and low of the day, we're only looking at the previous day in the current day. So this is an example of going from the previous day is marking out invalidation levels on the 1 hour, 4 hour. Now, what if you don't have any? That's fine. You simply just require a small wick in the same day to create that invalidation level, right? Which is generally always going to be, swing highs and lows. So this is GXT ideal profile, right? We go over here. We know this is in my course, right? It's the low of day created from a swing point, right? This is what I'm always ideally looking for, right? So that's what this would be. Now, when we engage with this low, what do we need to see, right? If we go back, we need to see, like if you don't reverse initially from a key level, we need to see this being the reversal point. So what do we need to see? Price creating a swing point from it. Just like over here, we need to see a swing point from a key level. This is a key level, the swing low. We need to see price expand away from it, right? So once price has that swing point, we can trade it. And once it starts to actually expand away, this is when we confirm it, right? This is when we go from the, this exactly, right here. This is when we look at here. It's just about what time this reversal formed, right? So this is a London reversal example. So what are we going to refer to? The hourly or 30-minute mechanically. So once that happens, this needs to hold, right? For price to expand away from this low of day, like this has to hold. So this is your intraday invalidation, or for reversal essentially, for the reversal daily profile. Now once price starts to expand away, this is your now invalidation for continuation. So like this fair value gap, for example, needs to hold for price to continue, right? As long as you have a drawn liquidity, these levels should hold, right? Because what do we know about phases of price? On our way to a drawn liquidity, we do not want to see deep retracements. So you wouldn't even want to see price come all the way down here. You don't want to see that, right? So as soon as we form that swing point, right, now we're doing the same thing. We're going here, we're marking out some sort of invalidation level within this candle that should hold if candle 3 is going to expand, right? So see, that's the same thing. And when we look over here, these 30-minute and 1 hour invalidations for continuation are what is going to form the low of 4 hour expansion candles, right? Because all we're doing is trading 4 hour expansion candles away from the low of day or high of day, right? Within that, this is where we set our invalidation levels. You have a couple invalidation levels that we can set. It's like I said, with these key levels, but it's also just wick size. That's another form of invalidation level. So you're already doing this without knowing this pretty much, but now you can kind of know what key levels should hold and whatnot. And it's key levels around the opening price. So just like we did here with the daily chart, we look for key levels around the opening price of this new candle because that's what would form the low. That's what would form a small wick. You're doing the same thing on the 4 hour chart. You're looking for key levels around the opening price of the 4 hour candle, right? And this is specific to if the candle is not opening up within a fractal model, because then there is no reversal. So now you must look for a reversal point, which would be these 1 hour, 30-minute key levels, right? So this is it putting it all together, right? So hopefully that makes sense. Now let's jump into some examples of this week, right? So there's a couple examples this week. So when you hop into the charts, there's only two things that can kind of take place, or like what you're going to be within. You're either going to be within the protraction phase of the candle, so the open low, or you're going to be within daily expansion, trading continuation. That's it, right? So when I talk about my last stream on April 5th, I would really advise watching that. Is my whole model is focused on trading with the daily candle, right? Trading away from hourly and 4-hour models, also 30-minute, that are supported by the daily candle. So if you're trading the protraction phase, if you're trading the wick, then how do you know it's supported by the daily candle? Well, when you think about when you think about bullish daily candles, what does it do? It opens low first. So that's one way it can be supported by the daily candle. The other way is a small wick, right? A small wick on the daily candle is another way it's supported by the daily candle, right? That was the worst drawing ever, but you get my point. So what about if price is already a bullish expansion candle? Well, if you hop in the charts and price is already expanding, it's already supported by the candle, right? Because it's already expanded. So what you need to, your main concern is when you're trading continuation, you need to be trading near some close proximity key level for price to continue from. Like what I mean by that is like, yes, we're trading away from the low of day. We are aligned, but we're really far away from the low of day, right? So when you're really far away from whatever you're trading away from, you need to have some closer proximity, ideally some sort of closer proximity manipulation to trade it from. But it can look a couple different ways. So what I mean by a close proximity manipulation is a manipulation on the 30-minute or hourly time frame like this. So as we know, we like to trade away from protected swings. So this is trading away from protected swing within expansion, right? On like the 1 hour or 30-minute. Now, what if there is no manipulation? What if we just hit fair value gap, which is fine, right? This is what I mean by you need to be trading next to some key level to form continuation. Well, if you're not going to have any manipulation to trade away from, but you will on the lower time frame. So what do I mean by that? We're obviously going to get a swing point to trade away from this fair value gap, right? And there's not going to be an hourly manipulation because it's a fair value gap. Well, on the lower time frame, you're going to see that. You're going to see price trade into it. And this is where you want to see some lower time frame protected swing be created within the swing points, right? This is very important. You need to see these reversal signatures on the lower time frame within the swing point. This is actually how you validate a swing point, because price can look like this. It can look like a candle too, but price can look like this within the candle. It can look shitty and like consolidating, and that would be pattern trading a candle too. We need to see these two things align. We need to see the phase of reversal, the market phase of reversal, or what am I trying to say here? The phases of price like showing reversal. That's what I'm trying to say, which is this. So if you go over here, this goes back to one of my streams. This is what we want to see, right? Is we want to see that V shape ideally, right? Expansion into the level, expansion away. Now, this is what it would look like. Here's your reversal point and that V shape, right? But what if price hits the reversal point and it doesn't initially reverse? It doesn't give you this V shape. It consolidates. Well, this is when we refer to AMD reversal, right? Which is what we see here at this swing point. So let's just run through this real quick. So like I said, when we have a previous day's close that hit a key level or whatnot, we're just asking ourselves, are we opening up near something that we can trade away from? So here you don't have a closure. You don't have a reversal visible by the daily closure, but that's not always necessary, right? This is what's important. Price trade into a relevant swing, right? So the weekly is opening near or inside of a range. So if it opens low first, what does that generally support? A bullish candle. It's on any time frame. So this is a weekly time frame, right? And this is a relevant swing. Look at the space between this low and this low. I don't care about any of these swings. These are not relevant. Why? Because they're failure swing to this low. This is something that AM talks about. So he talks about protected swings. So I would definitely, or relevant swings. I would definitely watch that. But if the previous day hit that level and have some sort of reversal within the candle, so within this wick we have a reversal. If this day is not going to sweep out the previous low and continue, then what needs to hold? This is our first invalidation. We're setting it right now. Is this fair value gap or this opposing candle, right? So if I go to our slides here, or our little thing, it's essentially this. We're doing this right here. We're marking out a key level within that previous range, right? But it's essentially this, right? Where we have an order block or a fair value gap that price should respect if we're not going to take at the previous low. So you see how we respect it very early on in the candle. Now what do? If this is going to be the low of day, Asia session, then this fair value gap needs to hold, right? In order for us to trade this fair value gap, what do we need? A swing point. We don't get it. We don't get a swing point. So what do we require to trade this is a manipulation. Because we don't trade away from this consolidation, right? Because this is expansion, consolidation. In order for us to trade this, we need a manipulation. We don't get it. That's fine, right? We simply just don't trade it. Then we're creating a new key level, right? If this low is going to stay intact, then obviously this fair value gap needs to hold. So we get a swing point in a London session. We get this swing point. Now, what do we want to see price do? Expand away from the swing point. Now, when price doesn't do this, this is where this creates a protected swing. So you have swing point 1, swing point 2, swing point 3. You didn't have a swing point before, but now we're creating one, right? This creates a relevant swing in the market. The space between these lows, right? You need it to manipulate this low. If it doesn't manipulate this low, where are you going to go? This low. So this is why I have this rule. You can mechanically define these things. You can mechanically define the whole process of trading intraday. This is exactly what we require right here, right? So once we hit this key level, what do we need to see? We need to see price manipulate it, right? So when we engage with this level, right, we don't manipulate it yet. We don't know yet because we haven't formed a swing point, right? What phase of price is this as well? Expansion, consolidation. Now we're manipulating. So we can't trade it until we have a swing point. Boom, we have a swing point. Now what should price do? It should expand away from the swing point, right? And now we can actually set a new invalidation. It's actually this hourly opposing candle, right? Goku. Okay, sorry. We have this hourly opposing candle, right? So now this is a protected swing because this was a relevant swing because of the space between it. But when we manipulate it, this is a protected swing within daily continuation. So remember what we talked about? Whenever you're trading within a daily expansion candle, we're really far away from low of day. As long as you have a drawn liquidity still intact, which is the high of the week, the current high of the week, it's 1800 on Sunday. Obviously not a relevant time to form the high of the week or anything. We have a drawn liquidity. We also have this hourly range high here as well, right? Which is a failure swing to all of these highs, really. So now we have something to trade away from. And now all you're concerned yourself with is all you're trading within a 4-hour expansion candle. Yes, right? You have that small wick. So you're good, right? And at this point, we want to see with this swing point, what do we want to see in the lower time frame? We want to see reversal signatures, right? So this is what I mean by when we trade it into this low, we consolidated. We didn't get that CSD, right? If you look here, this is exactly what this looked like, right? We trade it into this low, or yeah, it's a low on our example, but it's a high over here, and we consolidate. So we can't trade away from this consolidation. We want to see a manipulation of that low, right? So it's essentially this exactly. It's this, but kind of like fractally. It's the same shit, right? Because when we hit a key level, we didn't reverse, so that becomes the reversal point. Exactly like this, right here. Right, so now we need to manipulate this low and then form that CSD, right? So if we manipulate prior to a driver, right, and we already have an assumed low of day in, what should the driver do? It should expand away, right? This is what we start to see. 9:30 start to expand away. I don't think we don't have 8:30 news yet. It's just 9 o'clock, 9:30, which is within a swing point. So 8 o'clock is what created the swing point. This is just a candle 4 continuation, right? Which is once it starts to expand away from low of day, this is very high probable, right? This is what we talk about all the time. This is in my T-Talks video. This confirms the narrative when we see the driver start to expand away from whatever reversal point, whether it's the low of the day, you're trading the protraction phase, or just continuation, right? And we'll talk about more of drivers. There's a lot to go over with drivers, but this is the general rule. You want to see it expand away, which it does, right? And this is one of my entries that I took on Apex. I actually entered before on Top Step and some other firms, but yeah, this is my idea, right? And I'm just trading to that previous day's high, which is the current week's high, which is a relevant level in the market. And yeah, that's an example of kind of walking through the process there of invalidations and whatnot. Now let's go over like this day or something. Let's go to 4 hour real quick. So here, how does the daily candle kind of form, right? So it opens low first. That's exactly what we want to see for a bullish day. And we think about relevant swings, or just even like, you can view this as a couple different ways. This can be viewed as internal to external, but it's simply a protected swing on a lower time frame. Or sorry, a relevant swing. So you see the space between this low and this low. Like ideally you manipulate this level, right? And that's what we see. So we get our initial swing point. So this is exactly what we require. When we hit a key level, we want that swing point. So when price starts to expand away from that swing point, it's going to create validations, right? Or invalidations for the actual reversal profile. So for this to be the true low of day, this has to hold, right? And then once we engage with these levels, what are we wanting to trade? Swing points from them, right? On the 30-minute or hourly. So that's what we get here. And then once we, respect this or create a new, once we actually expand away from the swing point, what are we creating? New invalidations for continuation on the 30-minute hourly. So see how this process can be fairly mechanical, right? And this is within the protraction profile. And this is one way. Again, there's a lot of stuff we can talk about with the drivers, like, trust me. It's specific when you see the daily candle has yet to actually expand. You see this? So 8:30, there's a driver 8:30 and 9:30, obviously. And the fact that the daily candle hasn't expanded yet is how you know you're going to get a one-sided expansion generally. So that's what we get here. Extremely explosive. This is what actually creates the body of the candle. Because if we haven't created the body of the candle prior to a driver, when would it create it? Ideally, the driver, right? So like, I'm telling you, this stuff can get very mechanical and you can start to anticipate a lot of these things. And what do we do prior to the driver? This is even more important. We hit a key level, but we retraced prior to the first driver. So after expansion and retracement, what do we do after that? We expand, right? And we should already expect expansion if this is the true low of the day. So there's a lot of logic here, and we're just trading GXT, right? We're just trading the 4-hour expansion candle aligned with the 8 a.m. and 9 a.m. expansion candles, right? Because at this point, like the first hour obviously is now creating its aligned expansion. But as soon as this hourly candle retraces or starts to retrace, it's not aligned with expansion anymore. So you simply have to do what? You have to wait for the new hourly candle to realign itself with expansion, right? So yeah, that's just a good example of us refining it right down to the 30-minute or whatever for key levels and whatnot for continuation. So we'll get into some questions now. That was a lot of yapping. But yeah, we can really kind of define what should be our reversal points and what should be our invalidation points for reversal, but also continuation, right? It can be very mechanical. And then phases of price is how we gauge how if we're actually going to reverse from that key level. This is why I have this slide for a reason, right? It has to do with phases of price. So my stream on April 5th went over phases of price, which is one of the core concepts that you need to learn. It's absolutely crucial to learn this. But yeah, let's get into some questions now. So, okay, this is when we're doing class round. Where's the SMT? What SMT? Oh, are you talking about the SMT slides? They're done. I don't know if you're talking about that or what. Okay, I'm just trying to see where the first question started. Are these slides new? Yeah, I just make them for lectures like this, but they're not in my course necessarily. I'll have to ask if I can add them or something in the course. What do you mean leaked? I don't even know. Did I say leaked? Oh, oh, the SMT slides. Yeah, I just haven't released them. Dude, that SMT, I'm telling y'all, dude, SMT. So like SMT is actually, this is the whole framework, what I'm showing you guys. The April 5th stream with this is how we set framework, but how do we confirm framework? Is with drivers expanding away from our reversal points, or the low of day, high of day. That confirms narrative. But it's also SMTs. That confirms narrative as well. And then how do you confirm SMT? It's what we're going to go over in a future stream. It's like two-stage Kraken correlation, strength switching. When you have all these filters in price, you can trade almost every single day. And you can avoid a lot of low probability conditions, which is another thing we can go over. But that has to do with phase of price. It's like this day here. If you go Friday, this is very easily avoidable. So if you check this out, so we kind of open high first. That's not the main concern because there's no established high of day. Why isn't this an established high of day? If this is going to be the true high of day, what would we want to see? Expansion away from it. What do? We fail to kind of manipulate it. We just consolidate. So whenever you see price leave a consolidation like this, or leave failure swings, that generally means we're going to continue like this. Now, where's the relevant point of reversal here? We can kind of define it a couple ways. You have this fair value gap or this fair value gap or whatever. But it's also on ES, we make a deeper run in the range, I think. Or sorry, YM. Right, you have this fair value gap. And do you see how price, there's an SMT here? But do you see how there's no sort of reversal signature with the SMTs? This is how you know it's fake. This SMT is fake. But what you want to see is the strength switch, ideally. You want to see YM catch up to NQ and ES, but that never happens. That's one red flag. Here's the main red flag, though. This is the main one. So you mechanically cannot trade this 6 a.m. candle because it doesn't support expansion. But I wouldn't even be trading it because of this. The driver failed to reverse. So what I mean by that is prior to the driver, we had SMT. This should be the low of day. There's no reason to manipulate it because what are we doing? We're just bullshitting, right? And when do I want to see price expand? Or literally around the driver. So if we manipulate prior to a driver, I want to see price expand. It doesn't mean I'm going to trade it because the 4 hour doesn't support it. But the fact that we do this super deep retracement, this goes back to phase of price. This is like so important. So the reason why we ideally want this SMT and manipulation to hold is because this is what we look for to trade away from internal to external, right? And ideally to form low of day, like we mentioned, GXT ideal profile. So like there's just no reason for this SMT to fail. And if this was a true SMT or reversal, what do we not want to see? Deep retracements. We want to see shallow retracements. So what you see here is this very deep retracement, right? And go on to even deeper retracement. So look at all these failure swings. Like you can't in this SMT that YM is creating. So you see how YM creates. This does not matter at all. This goes back to some of the SMT stuff I will show you guys. How to filter out SMTs and shit like that. This is something I would never trade with right here. Very avoidable loss if you took this. Yeah, like mechanically you have a GXT. But GXT, like anything can be pattern traded. Just like literally like anything. And your ability to filter out like this type of stuff is going to be what really separates you and really skyrocket your success or whatever. Because this is important to know this type of stuff, right? And if you look at ES here, you're going to see it comes back down here. And notice how I've shown a couple of guys because some of you guys have done one-on-ones with me. But notice how this asset, the weaker one, reverse. We also see no wick at 10 a.m. So it's like you can't trust this SMT lows because this didn't reverse. What does that mean? This asset's lagging, the other assets are lagging, we'll take out this low. This is what happens, right? And now we're forming a reversal at a relevant time. This is what I mean by like, if we have some sort of manipulation prior to the driver, there's only two things that needs to happen, like two things that need to happen. It's either the driver expands away from the reversal point or the driver creates the reversal. So what I mean by that, so here the driver does neither. The driver doesn't create the reversal and it doesn't expand away from the reversal. So I'll show you an example of that, of what I mean by that. If I can recall here, right here. I just remember this, so. Here, a potential low of the day candidate. Why? Because we have a key level that's being hit. We have this CSD as well. Give us that swing point, but we mechanically can't trade this candle. Why? Because it doesn't support expansion. Right? Very large wick on the 4 hour. So we'd be waiting for 10 a.m. But for this to be the low of the day, what do we want to see? We want to see reversal signatures. So kind of don't see that, but it could pass maybe. It could pass. But the main thing is we need to see the driver expand away. So the driver is at 930. We need to see this, right? We don't want to see this super deep retracement. We can already mechanically define a super deep retracement by marking out EQ of this candle's range, right? So what do we see prior to the driver? We make that super deep run, right? And then the driver releases, and then it fails to expand away from this CSD. So what does that mean? That price pretty much needs to manipulate this low right here. So if price manipulates this hourly low, then we can pair a manipulation with the driver, right? We want to see the driver manipulate this low. So that's what we see, right? Expansion met with expansion, right? That's the reversal signature that we see. We also see a reversal candle. So this is what I mean, where if we go back to over here, this day here, the driver didn't create that reversal, right? It didn't go and sweep out this low. So that's a red flag. Like, there's just not enough here for me to trade. Even when I think maybe this S&P hold, I just stopped watching like super early on. Yeah, I don't care about this. Like, this is like a feather swing sweep. Yeah, it expanded, but it's going to be super ugly, I'm telling you. You can already anticipate that shit. I'm not interested in that at all. Let's continue. Is there any way to tell that the low high of the day is definitely the low high? So this is when price trades into a relevant level and then gives you a reversal signature. That's why it's important for price to expand away. And then it's going to create these invalidation levels for continuation, right? So like this. It's going to create these invalidation levels for continuation. And these need to hold. And then what do we want to see? We want to pair that with the driver. So when the driver starts to expand away from that, that's how you know. That's how you confirm narrative, right? So do you use the CRT? Oh no. So we don't use CRT here. Okay, but I'm gonna answer this question first real quick. Let's say price trades into the key level and we're trying to go long, hourly close as a bearish candle, but on the 30-minute we have a C2 closure. Yeah, you can still trade that. You can still trade that. So do you, it's like the same thing when the 4-hour candle is not a reversal candle, but if you look within the 4-hour candle, there's a reversal candle on the 1 hour 30-minute. It's the same thing, but fractally. So do you use the CRT after CST has formed? 50%. I don't know what you mean by that, 50%. So no, you can use the fractal model. I know what you're asking, I think. At the low of the day. So what I mean by that is the example I just showed is a protraction. You're entering within the protraction. Like I mentioned earlier, you can only enter within the protraction phase or within continuation. So this would be an example of entering a swing point within the protraction phase, which is the opening low of the candle, like within the wick. So how do you know that you're being supported by the daily candle? Because that has to happen, right? This candle needs to open low first, so that's happening, right? Needs to hit a relevant level. That's happening here on the 1 hour or 4 hour. And also, what else? Oh yeah, small wick ideally. So this wick is kind of large-ish, but still fine because even if there's a large wick, we can still trade it, right? We just have to adjust our targets. That's the only problem. That's the only thing. So you can trade this first swing point that creates a low day. You don't have to wait for the CSD. That's what you're asking, I think. You don't have to wait for the CSD. We can trade this right here that you see. This candle 4 that you're going to see expand. You can trade that. Which is ideal. Like you want to trade this, by the way. Like this is what I want to trade ideally, but I'm not a London trader. So it's specific when New York creates a low of day, high of day. So like New York reversal is when you're going to enter within the protraction phase. Otherwise, you're just trading New York continuation. What does invalidation mean? It's like a let's say you're wanting continuation or something. You're just setting a point where like price needs to respect. If it doesn't respect it, then your idea for going, for continuation is like invalid now, essentially. Which is really we have multiple ways of identifying invalidations. One of the ways is by marking out E key of a range. The other way is just key levels, like we said. And the other way is aligning expansion candles. There's a couple ways that we do it. So you already do it subconsciously. Is there a way to get TradingView set up to look like those candles? Oh yeah, this is an indicator. Someone can probably share it with you, but this is like a paid. If you look up this, apparently it doesn't pop up. I got this from T in his channel, so like it must be like some paid version or something. I don't pay for it, but yeah, I don't know. There's like a link that someone can share with you, but yeah, it's just an indicator. No, I don't use Figma for the TradingView setup. I think that's what you're asking, right? Is there a way to get TradingViews set up to look like those candles? Yeah, I think you're asking for the candles. The ones with various candle size. Oh yeah, Fractal Indicator, yeah. I know what invalidation means, but the way he uses it in context is a bit confusing to me. Yeah, it's just setting new invalidations. That's why it's a lot of moving parts, but yeah. It's all the same thing. It's just fractal. You say far away from the low. I mean, how many points approximately to consider it? Oh, like there's no way to gauge relevant swing highs and lows, like mechanically. You're just gonna get a feel for it. Like this low here. Essentially, all relevant swings are spaced out highs and lows. I can't give you a point amount because it's like impossible, because the markets are always like changing volatility and whatnot, so you can't even do that, to be honest. But you see these lows right here? See this low and this low are really close to this low. So this is where we want to see, we would never frame a reversal off of this low. Why? Because it's a failure swing to this low right here. You would want price to manipulate the very external range, right? This is what creates a relevant swing, right? This is a relevant swing, right? Because these two lows here are very spaced out. Does that make sense? So you want to see manipulation of these lows, or if you want to get to this low, you want to see a continuation through this low to get to this low. Does that make sense? So this is where we look for continuous signatures and reversal signatures, right? We never frame a reversal from a failure swing because price has a reason to return back, right? So if you try to frame a reversal from something like this, some people are going to be like, oh, there's a sweep, but this is still a failure swing, right? So price can still come back and take you out. But if price just does this, there is no reason to return back to this area because all the lows within, close to price are all manipulated, right? So that's what creates a relevant swing, which is like really important to know for framework. And every single day, there's relevant highs and lows within continuation and reversal. So it's like extremely important to know. When you say far away from low, okay, yeah. Buy teacher. I trade if then save it. Yeah, pretty much. Key one, let's say the overall bias is bullish and 8:30 a.m. driver is in our favor. However, at 9:30 the driver gives us an opposing move. What should we do? So as long as it doesn't disrespect the continuation, like invalidation point, you're good. Because this goes, like you can literally anticipate what the driver will do with how, like with what happened prior to the driver. Now here's just one thing. If the driver, or prior to the driver, we expand with a large range, this is when we typically might get the driver make an opposing run, maybe like a pretty deep run back in the range, right? Whereas, let's say we manipulate prior to driver, but we don't expand yet. This is when you're going to get a one-sided expansion. Because if we manipulate prior to driver and we haven't expanded yet, then what do we do after manipulation, right? We expand. We don't retrace, we don't consolidate. This is when you can anticipate price to just expand. But if price has expanded prior to the driver, then it could retrace or make an opposing run to the draw. How do we validate continuation? Is when it closes back through the opposing candles that it created when it went with that opposing run to the draw, right? Or, you know what I'm saying? So that's what I mean by that. Why does that keep doing that? Whoops. That's a good example this week. It was actually this day right here, I believe. Let me go back here. So this is the example that we talked about earlier. So where's 930 at? So here's 830. This is a driver. 830. Where's that at? Okay, here. I think that's 830, right? No, that's 820. Boom. So there's a couple ways this can form, right? Price can, so like I mentioned, you see this retracement prior to this driver. This is when we don't need to retrace anymore. It's already retraced and hit that hourly key level that we marked out, that London created. So if we already retraced prior to the driver, then we want to see the driver just expand away. Does that make sense? So here's the driver expanding away. Like you can already anticipate this type of things, right? And this is where you see 930 also expand, right? But if I go to like a day like this, and it can do something like this. It can go like, the driver can open up, maybe sweep out this low. This open low, or the opposing run to the draw, which is higher, is going to create opposing candles. So when price closes through, that can be an entry that you pair with a continuation. And that's how you confirm narrative right there. Now, there's a better example of this right here. So again, what do we do prior to driver? It's very important. We expand it, or we manipulate it prior to driver. So the driver should expand away, right? The low day is already put in as well. So this is specific when the lower time frame has started some sort of expansion, right? But we don't want to see some really deep retracement, right? We just sweep out this low at 930. You see the opposing run to the draw, which is higher, creates an opposing candle. When we close above that, that's how you confirm that the driver is indeed expanding away from that reversal point or the low of day. And this is what confirms narrative, right? You see this all the time. Very, like, the way drivers react to price and whatnot, you can actually frame, when you actually can frame framework and you're pairing, you know, drivers with your framework, it's one of the most consistent things you're gonna see in the market. Like this happens all the time. This is how you invalidate price too. Like this here is why I said trading this day is invalid after 930 failed to do what we require. So this is an if-then statement. Signature of strength switching. Can you talk about that? Yeah, I can talk about that a little bit. So if you go on gold here, so just when you think about framing trades, right? We're always looking at other assets, correlated assets, ideally within a triad. So the triad for gold is obviously silver, but it's also XAU euro. And then we have for oil, it's RB and HO. And then for indices, it's NQ, ES, and YM ideally. Now, when these assets are not correlated, like when YM is not correlated to NQ and ES, we refer to RTY, okay? So what we see here is the weekly candle open high first, creating a very large kind of open high, or just wick. So what does that tell you? That we're not likely to expand like really far, right? If you go on over here as well, we have that. So like you can already gauge how the weekly range is going to develop, ideally. Now what do we see this asset do? We CSD on the daily. And then this, after expansion, what phase of price do we get? An inside bar, which is mechanically defined as a consolidation, right? Which is a continuous signature. So on the higher time frame, the signature for a consolidation is obviously when price stays inside of an actual high and low on the daily chart, but also when price just inside bars within the previous day. So that's what you see here. And that can be on any time frame, by the way. But as you see, price has this consolidation high, consolidation low, and that's after expansion. That's after the weekly open high first. So this all points bearishness. Now, how do we want to leave a consolidation? Ideally, when we manipulate something and form some sort of SMT. So this is where you're gonna see silver take out this high, forming an SMT with that high. So there's an SMT here, right? As well as here, as you see with the previous high as well. So how do I know to trade? How do I know that this asset's gonna expand the most? Well, what do we see about you know, gold in general? These two assets, they're more weaker, right? They expanded, where prior to Friday we didn't even expand on silver. So what does that tell you? Silver needs to catch up. Now, how do I know when it's going to catch up? Well, the first trigger is SMT. That's the first thing that needs to happen. Now, the second thing that needs to happen is strength switching. So you're going to see that here. Let me try to remember where the hell it is. It's right here, I do believe. Yeah, so you see how these assets have these fair value gaps on gold and euro? They have these fair value gaps. Look on silver. There is no fair value gaps here. So the strength switching hasn't started yet until here. Until right here. Why? Because this asset creates a lower low. This asset is creating a higher high. So what does that tell you? Price is consolidating while this asset is expanding to catch up to gold and CL, right? So when I see that strength switch, I'm like, okay, now this shit is really going to expand. And that's what happens, right? And we know that price is not going to expand that much because of the weekly range. We know that, this fat ass wick. Does that make sense? And this is a very large wick over here. So what is my target? It's very simple. It's always an hourly draw on liquidity. If I want to trade past the hourly draw on liquidity, it's just a what's it called? A standard deviation, right? -4 gets hit perfectly there. So that makes sense. So as soon as we create this lower low, okay, boom, 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 boom. I know that shit switched. That's the trigger. I'm telling you, this shit right here, dude. This SMT stuff is more sauce than anything you will ever learn. I promise you. And you won't find it anywhere. Besides maybe a couple places, but no one really teaches this stuff. And it's really how you confirm narrative, pretty much. It's so OP, dude. Yeah, this is being recorded, hopefully. I'm recording. Can you please, can you explain a London session Forex GXT, please? Okay, sure. Well, it's the same thing. It's just a 1 a.m. Yeah, 1 a.m. or 5 a.m. Candle. So I haven't even looked at majors. I don't even look at Forex, but we'll see if we can find any or something. This looks so ass. What the fuck? Maybe this one is one. What time is this reversal? No, this is ass. No, this is 5 a.m. So that's like outside of it. London kill zone. What about this one? Is there SMT up here? Okay, cool. What about this one? This one looks a little decent. What about 30-minute here? Nope. What about over here? Nope. So there's no 30-minute close. You get an hourly close. You can't really trade it until like right here, low key. So like the reason why like you don't really want to trade this here. So you get the SMT. The price is expanded. Like T talks about this, where when you expand really low in a range. So here's essentially your reversal point and your target. You're very low in that range. You don't really want to enter around there, especially after expansion. Ideally, so we have price expanding away from the low of day. So let's go over our little slides here. You have the price expanding away from the low of day and forming that initial CSD, right? That CSD. But now price is really far away from that initial swing point. So we want to be trading away from like key levels that are relevant to current price, like close in proximity to current price, and we want to be trading away from swing points. We want to be close to these swing points because we know price expands away from swing points. So here's an example right here, right, of a you know, obviously a fucking whatever candle 2. And if you look at the 4-hour chart, we're already aligned with a 4-hour candle. So you could essentially just trade this, right, to all these feather swings. That would just be like one example there. Now I can like I can like maybe post some Forex examples for you guys, because dude, I don't look at Forex at all. I honestly think you guys should just trade futures. It's so much better. But that's just my opinion. It's like so much easier and better. But yeah, I should focus on Forex more, but that's more of like a Ian thing. Ian trades Forex. He's like probably way better than me at Forex. But it's the same thing. It's literally the same thing. But I'm just saying that indices, way easier to trade. Like way easier. It's more volatile. You have drivers every single day. Like, it's just so much easier, man. Could we get a little more in depth? So we're already like an hour here. So I would watch AM's course, the expansion model course about relevant swings. He goes into deep detail on that. But yeah, I'm probably going to end it here. We're at an hour. Is now a good time to launch? We heard that voice crack? Yeah, I know. Because I'll be yapping, dude. But yeah, if you guys have any questions, yeah, I can't get through all these today. It's because half the stream was freaking a lecture. So when I have lectures, it's hard to watch all of the it's hard to watch all of or answer all the questions. But yeah, hopefully that helped you guys. So you guys need to apply this, what the stream is with April 5th. It's very important to combine those two streams. And then it's about, like, we're going to be going over, like, a couple of things. So, like, drivers. Like, you can get really detailed into drivers. We can get really detailed into SMT. And this is what really confirms narrative. Like, I'm telling you, like, it's very important. Especially SMT. Like, bro, SMT is the biggest part of my trading. I don't know when the SMT stream will be. Probably maybe next week if y'all want. I don't know. Bro, these fucking leakers, bro. Like, I swear to God. I'm telling you, everyone, dude, if I make a video on it or something, everyone's just start using it because it's actually that good. Oh God, it's so good. But yeah, I'll catch you all later, man. Y'all have a good weekend. Bye bye.